So, for this next session, I'm gonna invite some investors. Do we have founders here? Founders in the room? All right, okay. Hopefully this will be really helpful to you guys. So, Justine, Steve, Talia, Arsham, join me in welcoming them. All right, so this is the moment that tables have turned. I'm usually the one getting asked questions. Now I'll be the one asking the questions. So let's get started with...
Just give us the login to the data panels, that's all. No questions.
So let's start with, this cataclysmic moment, the ChatGPT moment, or maybe for our space, the DALL-E moment. It's almost like 3.5 years ago. So a lot of time. This is like a lifetime in the AI space. I'm very curious to hear from you guys. Like, what have you been right and what have you been wrong about? Maybe let's get started with Talia.
Okay. Well, first off, it's so awesome to be here, and so great to see the fall community. Not just because fall is great, but it's great to see the good guys win. I love being a part of this company. What did we get right? Demand is infinite. I think when ChatGPT and the like just launched, people were like, who's really gonna use a chatbot all the time? It turns out like billions of messages all the time, constantly. It's being adopted everywhere. What else did we get right? It's not just one model to rule them all. I think fall is a perfect exemplifier of that, and there's hundreds of models on fall. There's certainly a power law, but there's a long tail that's quite long. Some things we got wrong. I think we overestimated that AI would replace a lot of work. It's been much more of a co-pilot than on autopilot. And I think we've overestimated how messy the real world is and how hard it is actually to adopt AI in certain use cases and cultural challenges and cultural gaps. You heard about that with the studios from Jeffrey. I think that's happening in every industry. And so adoption's actually in some ways slower than we anticipated.
What about you, Arsham?
So, I think the main thing I got wrong was thinking that I had any idea into the future. I think it surprised me every single turn of the evolution since ChatGPT, the amount of growth, the consistency of that growth. I think a few of the things. So I've been incredibly humiliated and humbled throughout this entire experience because it's been such an explosive space. I think one of the other things I got wrong was there was this question of, well, how fast will the model layer get commoditized? And they're offering similar things, and if they're all accessible via endpoints, then you can just kind of interchange them as you'd like. And clearly, that hasn't happened. It seems like there's insatiable demand, and one model's great at one thing, and another model's great at another thing. I think another question that we had early on was, okay, if you believe kind of in what is the adage, like lines on a graph, that hey, you throw more compute and the models will just consistently get better, then eventually there will be a world in which the application layer is irrelevant because the models are capable of doing it all. And it turns out there's a lot of kind of work left behind the fold in terms of product and workflow that creates so much value beyond just kind of the IP at the model layer. So those are some of like the humble learnings over the years, but it's an awesome space, and there's still so much to learn.
Steve?
So what I got wrong, and a lot of people got wrong, I think, was that there was two schools of thought that LMs would quickly become multimodal, and that one large foundational dense model would rule them all in use cases and functions. And I think and that was, because ChatGPT launched and we all learned transformers very quickly. But I think what's played out is that LLMs are great. Even some multimodal LLMs are pretty good, but they're really bad at physics. They're not so great at math. VLMs are awesome, but not super deterministic on output. So I think that I'm more in the Demis Hassabis camp of like there are many different models and model types, and it'll be that way for a while. And then what we got right is we got generative media right. I think we had a, yeah. I think in I think it was like mid 2023, we started looking really at like video, right? Because images, I mean, Stable Diffusion was out and we were all playing around with GAN and it was super fun and it was super weird. And raise your hand if you were like in the GAN community back in the day. Yeah, about
True OGs.
about like 5% of the crowd. So if you played back then, everything looked like dreamscape, like blur. Like imagine you woke up and your eyes were still blurry and you were dreaming about something. That's what GAN felt like. But that GAN community really led over to the diffusion, stability, AIs, products, and stable diffusion and diffusion models. So I think getting that right, I mean, we even talked about it. I have witness, so I'm not just talking out of my ass. Berkay, Gurkum, and I were like, late 2023, we're like, generative video about end of 2025. So we got that right.
Yeah, I mean, we were even, I think it happened faster than we thought.
Yeah. And so, yeah, got that right.
Amazing. So, who here follows Justine more? Wow, that's more than I expected. But maybe not. This is the right crowd. This is amazing. It's everyone. Well, Justine, you're one of my favorite influencers on X. I just I feel like I think about things and then I go on X and you've written about them. It's amazing. It's amazing. So the question is, how do you stay up to date? Like with all the changes happening, and how do you balance your time between keeping up with the space and investing?
Yeah, there's so much going on right now in particular that it can sometimes be super hard to stay on top of all the new models and tools. Like sometimes I think even if it's your full-time job just to test them, you wouldn't have enough time in the day. I think the way I think about it is like, this is pretty much mostly what I focus on at a16z, and so I sort of have to be up to speed on the latest and greatest so that I know what kind of companies to look at, what's interesting, so that founders are like, she actually knows our space and could be helpful to us. So I view it, one, as a core part of the job, but two, honestly, it's become like by far my biggest hobby over the last few years. Like I got into this later than the GAN people. So I first got into this when Stable Diffusion came out, like 3-ish years ago. And I was just like enthralled from the very first day. I was spending hours generating, at that point it was like selfies of yourself, using like Photo AI and Lensa and some of those early tools. And I think from that, because I kept looking it up on like Instagram and TikTok and Reddit, now my feeds on like every media platform is so much AI content, which is like primarily how I keep up with it.
That's amazing. My feed is also all AI slop.
It's so great, right?
Yeah, it's amazing.
I tell people who ask me like how to stay up to date, make a separate account if you don't want your entire main social feed to become AI slop, because there's so much of it now that like it will take over everything.
Yes, absolutely. So, Steve, most people may not know this, but Steve actually has an art and music production background. He's also started a few companies. You want to tell us about that? And also, just curious, like, how does, AI versus the artists, what's your position on that? And like, when this is all said and done, what does the artist of the future look like?
Before I jump into that, if you're not following Justine, you really should. She's not overblowing this.
Thank you. I did not pay any of them to say this, which is crazy.
I mean, I don't understand, like, your guys' budget must be amazing, but like, you're like the best, really the best generative media product reviewer. And I'm like, oh, how does a16z have a big fund or something? Like, what's going on? Anyways.
A little bit.
Okay, so creativity on the internet is, is like the earliest use case of the internet. And it's funny, when people say slop, I'm like, yeah, there was website slop back in the day, like 94, 95. Most websites were kind of terrible. It was like directories and links and like really bad, like early JavaScript, like just nothing. But the link exchange that it created was the thing, right? It wasn't like visually very appealing. And people were like, oh, websites are terrible. They don't do anything. And it was the same like energy that people have now, but it's fine because models are getting better. Everyone's like figuring out how to use this stuff. So I say like bring on the slop, and it's up to the market, to the community, to users to like avoid it until it suits them, right? Some people love it and they're like, give me all the slop. And some people are like, oh my God, I just want real people. And that's great too. But I don't think it should stop people from going through that journey. You don't go from amazing high production value, perfect, pixel perfect, controllable media immediately, right? And so a lot of the developers in here who are building tools, I think that's the responsibility that you have, right? To make that better, and you know, the model labs as well. But anyways.
Yeah, I'm almost using slop in a positive
Yeah.
way right
I mean,
now, because you know, we got to change these definitions, maybe.
Slop.ai, go get it if you don't have it already. I don't know, but I think it's a natural progression, right? And so, yeah, early on, the reason why I got involved in the internet period was that I liked making websites about anime and films that I liked, and I was desperately trying to get audio on there, and it was like near impossible. And Flash back then was unstable, Macromedia Flash. It was just all bad. And so you felt like you were dealing with a lot of rough tools. And I think that was the first time that I saw this community on the internet that was basically like all these open source utilities and tools, and it felt like art, right? It felt like people like using mixed media, right? And I think that moving forward, there was this concept of using software, like whether you're using BB Edit on a web page for publishing, or you're using like Adobe software and a bunch of stuff. So every progression has had digital tools involved in a very human creative process. And you know, I think there's always pushback. Every stage in the cycle, there's pushback from the incumbents, the legacy way of doing it. And they're not wrong, right? It's like, it feels less genuine to have more tooling involved because you're more accelerated, but everyone gets over it and they move up the scale. Humans move up the scale. Like, we don't want, not everyone's gonna use paints and brushes. I still like to paint, but it's very rare now that I have kids, but, because you can imagine what happens when kids get a hold of it. But digital tools, software tools entered this picture. CG, VFX. Who's worked on CG and VFX? Literally like 1% of the room. So when CG and VFX came out, you could not imagine Hollywood like freaked the fuck out. They were like, no, this is terrible. Like, you know, you're supposed to make models of everything and then film it, and then like physical models. And this was much more efficient to use CG and VFX, and it was expensive. I spent like $30,000 on a music video for The Strokes. We did like a sci-fi video with a bunch of ILM people, and the guys at ILM were like, nope, it's great that you have this great project. You still have to spend money on it. And so
Incredible.
we're at a phase right now where $30,000 on FAL will get you like 100 different versions of that video passing through everyone's pipeline here, and then we can like, you know, compete on who's the best, and then there'd still be money left over for the winner, right? Like as a bounty. Okay. So we've gone through like 1,000, maybe 10,000x difference in cost to generate basically the same type of video, and this is good because humans are still involved. So creativity is not machines just generating machine outputs. It's humans being accelerated so that like the kid that doesn't have the resources, doesn't have all the software tools, doesn't have a VFX lab down on Melrose Avenue in LA or in New York, they can do these things. And I think this is democratization. And I think like today, you know, I produce films on the side still. That's how I get that out. But the other part of it is just looking at all of your apps. Whenever FAL releases a new model, I always go check it out, and I always go try to find who's using it. Sometimes I have to ask them, and then it's incredible. Like, you don't understand the power that's happened just in the last 10 and 20 years. Yeah. It's not a 10x, it's not 100x, it's much more than that.
Yeah, there's no way this kind of change doesn't change everything in this space. So I want to shift gears to the AI market in general, and I want to talk about supernovas. So if you're following on Twitter, Talia coined this new term for fast-growing AI startups, supernovas. Talia, can you tell us about supernovas?
Sure.
And also, you know, it's been a couple months, I think, since that whole debate went on. Like, how has your opinion changed since then?
So investors love benchmarks, and we're always looking at, okay, what does the good, the better, the best look like for each generation of technology? And for a long time, we had these like SaaS benchmarks, and they were really useful. But startups are like, it's like the Olympics. Every year there's new world records, and the benchmarks change, and the next generation is better than the last. That's always the case. And we've seen with AI a big shift in what good looks like and what great looks like. And that some of the best practices are changing and adopting. So we set out to try and say, okay, like what is the new good, better, best? And we saw kind of two sets of companies. One very small elite set that sort of messed up the whole database, and that was like the supernovas. And they messed up the whole database because there are these companies that are going like 0 to 40 million of revenue to 125 million of revenue on average, literally within 2 years. We called those the supernovas. There's a small set of them. They're super rare, but the growth is astronomical. But it also comes with some cost often, and the gross margins of those companies are thin, oftentimes even negative. And there was a big controversy on like, okay, is that even good? Is it good if you're 100 million of revenue and not? We could talk about that later. And then there's the second set of companies, like the shooting stars, which is what like I think of as the new norm. It used to be, there was a saying like triple, triple, double, double, double. And that's just adjusting up a little bit. It's like, we call it like Q2, T3, quadruple, quadruple, triple, triple, triple is what seems to be that, you know, next evolution of it. So getting to like 3 million in the first year, and then continuing to triple on. Anyway, so that was the controversy. That's a little bit about what we're seeing. And we're all trying to make sense of like, what does this new world look like?
Which camp are you on the controversy? I think like there's like now the VC world is split in two. There's the people who are like, I want slow growth, I don't want the supernovas, and then there's the people who are like, I like the supernovas.
But Burkai's asking if momentum is a moat.
No, my husband's there, and he says momentum is a boat. So, you know. I like it all. So Q2, T3, find me. Supernovas, find me. We don't discriminate.
That's awesome. Let's talk about valuations. Arsham, this one's for you. So early stage valuations are going up. You know, AI market's crazy. Late stage valuations are also going up. As a growth investor, what do you think of? Because by the time startups get to you, they're already, you know, very highly valued. So how does this impact like how you guys think about growth investing? And do you sometimes wish that, you know, you were investing maybe slightly earlier? What are your thoughts on this?
You know, it's funny. I think if you talk to 10 different investors that invest in various kind of parts of the stack, every single one of them will tell you that their part of the stack is the most challenging, the most competitive. And the truth of it is, they're all kind of right. It's a really hard kind of job today, just given how efficient the market is. If you're a seed investor, you have to put $10 million into a company with basically, you know, one iteration of an idea, certainly not even a slide deck in many cases. If you are at our stage, you know, it's kind of, we talk about growth prices with early stage risk. If you're downstream from us, then you have to bet on a company becoming a $50 billion or $100 billion market cap business to make the return that you're underwriting, and there are only so many of those that exist. And so the truth is, it's not easy. It's not as hard as being a founder, but it's not, you know, no part of the stack is easy, quote unquote, to make money. And so I think like ultimately there are two things that matter. If you really boil it down, it's the price per share on entry, and it's the price per share on exit. And prices on entry have certainly risen. What's happened to the prices on exit? I think what we're all seeing is that there's this outlier effect where the big get bigger. There's almost this like evaporation of the middle class. Those companies, those exits that were in that middle range where you could make your kind of base case return, those are happening fewer and fewer and fewer. And then The big companies are just magnified. The amount of trillion-dollar businesses that exist now versus that existed 10 years ago, obviously it's gone, went from 0 to whatever it is, 7 now, and it's only going to go up. But I think the percentage of like the volume percentage of businesses that do reach those stratospheric highs will just be smaller, and so there will be this kind of consolidation of value, and so ultimately you just have to pick right, and that's the hard part.
Absolutely. How does this impact the early stage, Justine? I mean, you're pretty stage independent, but I'm very curious, like, how does this impact how you guys invest?
So I've been in venture for like 8 years now, so a while. So I survived 2021. I don't know if anyone was around during that time period when I would say the valuations were probably equally crazy as they are now, but there wasn't sort of a new technology cycle driving a lot of new adoption of the products, and so we weren't seeing the type of growth that we've seen today. I think our view is like, yeah, some companies are really expensive, and they're also like the best companies we've ever seen in terms of like how fast they get adoption, how much they're growing, how much like we see all sorts of crazy things now. Like something starts out as a consumer generative audio or image or video or whatever, and then like someone from a giant enterprise signs up and like self-serves into like what eventually becomes a $2 million annual contract, which like we've never seen before. And so I think our view has just been like, yeah, are there some prices that seem crazy from the outside? Probably, but I'm sure all of us, like when we dive really deep into the data behind these companies, the retention is often incredible, the expansion is often incredible, like, and they're growing at rates we haven't seen before.
So are you saying we're not in a bubble?
I don't think we're in a bubble.
Okay, cool.
I think we're in a good bubble. You need a bubble. Like you need slop along the way to like perfection, right? I've been through, I guess, 3 bubbles. I don't know. So late 90s, that was a bubble, and it was a good bubble until it became a bad bubble. So bubbles change, right? It's like benign, malignant, right? So so a bubble is important, right? A bubble is why you're all here, right? You get excited about a new technology space, and the wave is happening, and you want to go ride that wave. And so the best talent, the smartest people, flew to crypto in the last cycle. Before that, they flew to SaaS. Before they did that, it was marketplaces and sharing economy and social software before that, and cloud computing startups, and then it was web apps and websites. So it goes through these phases, and capital collects and gloms around that bubble, and then the best talent in the world goes after this. So an early stage fund like ours, like we were investing in 2019, like a quarter of our fund in ML, computer vision, and all those companies, God bless them, they all failed, right? Because it was too early, right? We didn't have transformers and diffusion models and diffusion transformer models. But we learned a lot. But now, today, like even if we didn't want to be an AI-focused fund, guess what? We would be, because all the best talent on the planet, all of you folks here, want to work in it. So as an early stage fund, we don't decide ultimately. The founders decide, and we follow them. It's a rabbit hole that gets bigger and bigger, and we want to go down in that rabbit hole with them. So that's just the nature of it. And then on valuations, it's an art, not a science right now, obviously, but there is some science when it gets into like a growth stage. But if you're like an early stage founder, it's really about the promise of the importance and size. And I make distinct importance versus size, because size won't be apparent in the importance of it. So if you were working on like, VLMs and VLAs for robotics in 2022, or even 2023, everyone would have been like, all right, I'll give you like minimal seed check just because we think you're awesome. But today, if you come out with like a performant VLA, VLM system for robotics, and you can prove it, you're probably gonna command like a crazy valuation without any sort of robots using it yet, right? And so, because now people understand the importance and the size of it, because a lot of other stuff has come into the lattice work of the space to say it's really freaking possible, and it's gonna change everything in physical movement and operation. So I think like, when I think about valuations being like supernovas, it's a good term. I hope they don't explode all the time though, but yeah. So if they get really big, grand finale. Yeah, good grand finale, good bubbles. So if you can do the math and the art to get there, I think that it's a land grab, right? And so on low margins in the past got, like, I was an early investor in Uber. It still gets crap, not anymore as much because now they're profitable. But for like 10 years, the biggest issue with Wall Street, with a company like Uber or DoorDash or Airbnb was like, you're huge, you're changing the world, like you have global footprint, but your margins are terrible, right? And so there's an argument, and you can take either side of this, which is like, while you're growing, to get the best people, to get the best technology, to have the most market share, you have to forego margins sometimes. Yep. And there are, you know, two schools of thought on that, right? But if you look at the biggest companies today, Microsoft and Apple never, like, I don't actually remember, but I don't remember a time when they were like, forget margins, we're just gonna grow. They were always like strong margins. But I would say that the most recent wave of companies that are successful in the public markets ascribe to this idea of like, it's a land grab, we need to go out with speed and grab market share, and they took the trade-off on margins, and they got it back later.
Yep. For the founders in the audience, I think specifically generative media, what would you guys like to see? I think, Justine, you have full visibility into everything that's going on. What do you think is missing from the space? And maybe for the early stage founders here, what are some good areas to focus on in your mind?
Yeah, I think it varies a lot by like the team and the type of company you want to build. Obviously, I still think there's room for more foundation models in basically every category, especially like it's very hard to compete with like Google VO3 on like the best sort of video world model, but like it might be a lot easier to build the best VFX specific model with like very great sort of well-labeled dense data for that particular space. I also think we're gonna see a ton at the application layer. We had this weird thing for a while where the models were getting better and better, but they weren't like stable enough for apps to be built on top of them. And it feels like now and I mean, honestly, thanks to folks like you guys who are building the infrastructure and providing inference for all these companies, they can actually build on top of models. And I think that unlocks both like horizontal workflows, but also a lot of vertical applications, like kind of a lot of what we just saw around things like architecture or design or like specific categories where people would use AI, but they're not experts, and so they don't know exactly how to prompt something themselves and stitch together outputs. And we've already seen that weirdly happening more in enterprise around language models with things like accounting and law and finance and all of these categories. And I'd expect we see the same thing come soon for kind of image and video.
Absolutely. I hope you all took notes. I think what makes our space really special is this diversity and the fact that, you know, these models are not generalizing as well as the language models. So there's huge opportunity there. I think we're out of time and it's time for lunch, but I would love to thank all of you guys for coming by. So let's give them a round of applause.
Thank you.
And break for lunch.